got my market structure pretty much mapped out. Right now for me it's a little bit, we've missed the move, right, because we had a breaker structure here on the 15-minute, but overall on the 4-hour we definitely are bearish. And so whilst we've been pumping up for some time, I did definitely anticipate a move down, but I need a retracement before I get in. I'm currently on my funded challenge, so I'll be happy to dive in to a trade just as long as I get something in. I mean, look, here's the supply zone here. And normally whenever we get a retracement, so if this is our low here, right, I need at least a 50% retracement for me to get excited. Ideally even 70%, but even into the supply zone will be even better. And so right now I'm just kind of seeing where we are, just monitoring the charts. Obviously we haven't even kicked into the New York session yet, so I have to just see how things map out a little bit. Let's just see how we go, eh? Let me know if anyone's trading right now as well, be nice. Been waiting for this fucking move for God knows how long. It's Friday though, isn't it? And obviously today you've got to remember there's an awful lot of options expiring today, and so there should be quite a lot of craziness going on. And so I'm anticipating a pretty choppy market, to be honest with you. I'm not sure what time they expire now. If anyone knows what time the options expire, I'd be keen to know if you drop a note in the channel. What do I want to do? Let me just check something out. OBS preferences, just making sure my output. Should be okay actually. I know, hang on. Yeah, it doesn't seem better. I don't know how that is in terms of the comms. If you're in the on the YouTube, just let me know if that's breaking up or it's getting a bit choppy. Just checking my drop frames; they're quite high. Let's try a second YouTube. If you're in the on the YouTube, just let me know if that's breaking up or it's getting a bit choppy. No, it looks okay actually. Okay, so yeah, let's see where we are. So continuing to break down, aren't we? Obviously, and obviously we also know there's a lot of options expiring. So I don't know what time the options expire, and that can have a dramatic effect on the chart. So it just looks like we're breaking down, but I absolutely need a retracement before I'm going to go short. You know, oftentimes whenever we reverse back after a move, an impulsive move like this, you want at least 30%, ideally 50%, but even better if you can get 70%. Right now, for me the supply zone is here, up to here. So a lot of the time you've got to be patient and just not dive in, because that's the worst thing you can do, right? So just dive in. But we've broken market structure here. That was that 15-minute down move. On the 4 hour, incidentally, we are bearish. This is the zone, right? But we can't define that yet, or as a break, because this is the range, the 4 hour range. And so theoretically, you know, if you look at applying that same mentality, you know, we've retraced it at 70. Well, it'd be the opposite way around actually. Let's go to the top to the bottom. You know, we've retraced well over 70%, and so, you know, once this move came down, came back up, beautiful area would have been to get back into the trade from a short. And even though the price is moving up now, realistically, that just looks like basic market structure to me. Down, retrace back, and now we've kind of lollygagged a little bit of a move back up, flush out all of this liquidity that was being built here, and then theoretically we break to the downside. That would be an obvious move, right? Because liquidity's been building for such a long time here. It's coming to expiration, and so that's what I'm looking into at this minute in time. Let's just see where we are. I just can't. I want to go short, but I just can't go short right now. It's too. Well, number one, we are oversold on the MFI. I can't. I'll let you know when I'm going to go into a short, but right now I'm not. This is the kind of thing, right? When you're trading, if you're a beginner, right, here's where you, and this could always play out, right? But of course, if you just dive into a short now, this is exactly what the market does, right? It provides you these big impulsive moves, and oftentimes the initiation of the move, right, was probably big financial institutions, not of course on whatever exchange, but collectively on Bitcoin, which is enough to move the market down. And then, you know, all of the kind of retail we're diving in here, right? Because we're thinking, okay, yeah, price is going to go hit the floor, and then it comes back up for that one a buy to sell, right? So as they've initiated the move, currently they're obviously in profit, but then they'll reverse it back. For anyone who's put a lot of kind of stops, for all the retail will be stopped here, right? So they'll have all the stop losses all linked across here. This is all liquidity now being built, of course, and so to perpetuate that move down further, you know, you want to see a little bit of a move back up. And so what we're going to do is not just dive in right now, but we're going to wait and be patient. The range is here, right? So the range is, you know, there and there. We broke down on a 15-minute breakdown there as a trend change, and so we are just waiting patiently to see how things move. Also, you got to remember, right, on not one of these candles have they claimed liquidity above, right? So what I mean by that is this was the candle that initiated the move, so this is where the liquidity is. This candle then initiated the second move, and so here's where the liquidity is. So, you know, what you're looking for is, does the next candle come up to take that liquidity before moving down? The answer is clearly no. On this one, this candle did not come high enough, didn't take the liquidity. This candle didn't come up and take the liquidity. This candle did not come up and take the liquidity. This candle, liquidity did not get taken. This candle, liquidity is not yet being taken. And so what we need to see is at least a liquidity, something to show us that the liquidity is coming up as a move to the upside. And so we're not seeing that yet. Preferably for us, we want to be able to see at least, you know, 30% of that move there would be ideal. But because that's oftentimes whenever there's a move, and you can go right throughout the charts, right, and you can look at this when each time you get your range, and I have all my ranges here, right. This is a 15-minute break to the upside, you know, from this candle here. Well, it's actually this candle. So the question you've got to ask is, do we retrace back at least 30%? Well, if this is the move up, where do we retrace back to? Well, we retrace beyond 70% here before we move back up and broke that move to the upside. But you can go back and test these right the way through, and eventually what you come to realize is there's no set default status. So what I like to do is to kind of just monitor the momentum of the move, and then it's like, okay, well, now that I know that we are on a confirmed move down, clearly bearish mentality here. You know, we haven't come to the 30%. We've definitely not come to the 50% or the 70%. And so there's an argument to say, well, actually, any of these are going to be valuable areas to look for the retracements. But realistically, the discount starts at 50% and above, right? So it just depends on how strong that momentum move to the downside is. And so that's why I always like to kind of just put that 30% on there, because sometimes you'll see in really liquid markets that really move, that actually the retracement is no more than 30%. And so it's like, well, do I want to miss a move because I'm being a little bit greedy, waiting to get on that 30%? But so the answer is in this case, possibly, because there's a lot of momentum in the move, and that's how I kind of gauge it. So in like really consolidated markets where price is just kind of doing this, you know, each time you at least want to wait for a 70% retracement. 50% if you want to be a little bit more conservative, but normally in bigger moving markets, 30% can absolutely be applicable. So we'll just see. I'm just chilling, man. I got time on my side, so I'm just relaxing. I'm waiting to see what happens. Style and motives. How are you, my brother? You are absolutely right. Patience is, but I tell you what, more often than not, you will get absolutely ring fenced if you try to dive into a move. Like, for example, right, you know, this move came down here. People tried to push it back up. Price is coming back down, but it's like you are going to have people getting in at every single candle here, trying to go short, right? And so, but what markets won't always go forever. This has already been, you know, we've dropped from 26,649 to 26. We've gone over like 300 basis points, which isn't massive, by the way. We're only on the 15-minute candles here, so I'm definitely still anticipating more momentum down. But it's gambling right now, isn't it? If you dive in on a short now, it's gambling on the basis that you think price is going to continue to go down. Now, whilst I do believe it could continue to go down, you're definitely not trading from a sign of strength, right? Because if I change that to the value, right? This is where value is for going short, and this is where premium is, right? I forgot the word then, but this is where it's premium. This is where it's going to cost you to go short, right? Because you're not trading from a sign of strength. You're trading from a sign of weakness if you're going with that same way. Now, that's not to say, by the way, that price won't continue to move down. It's just if you start breaking your rules because you're getting a bit edgy and you're seeming a little bit nervous, then it's not always. You might get one or two that go in your favor, but balance of play, you're gonna get shaken out. Like, no problem, man. So if we look left, right, this was a previous structure break where it was this move. I'll just zoom in a little bit so you can see that. It was this move here that created that new high, and so that would have been a previous structure, and so it's just taking a little bit of wind out of the momentum sales right now, because you can see where that is. If I just draw that's that low, right? So you can see it got a nice reaction at that previous low. And so now it's like, it becomes even more riskier to short at this point because the momentum's gone, right? You'd always want to, whenever you kind of shorten, really you want, when this move starts, it starts here from that equilibrium of the MFI. It's like an oscillator for momentum, right? So that's not a bad position. You're certainly in the let's say the discounted phase for sure, and in this area again. But realistically, we're near the bottom, right? So we're starting to be a little bit overexposed to the oversold side, and so, you know, not to say we've missed the move, because if anything, what I'm anticipating, absolutely I'm anticipating, is that price comes back into this zone. Ideally, this is the supply zone, right? When I say supply, what I mean by that is you've got to think how much capital does it take to make these moves? Like, that's a lot, right? Because remember, you're going to have the bullish force pushing it up, and so you need an overwhelmingly disproportionate amount of sellers to push the price that hard. So that you just know whenever you see a move like that, that's the big institutions starting to push the pin on moving price down. And so for those sellers who didn't get an opportunity because price moves so fast to get a short in at these levels, usually what you see, I don't know whether you want to call it the market algorithm or the central exchange algorithm or whatever it is, the index algorithm. Realistically, what you tend to find is price will naturally try to gravitate towards these areas, because this was the candle here that preceded the candle that done that huge drop. So that's what you define as the supply zone, right? That's the area where that's a very high probability trade. If price comes back up to the if by the way, you can wick up, take a bit more liquidity, that's absolutely fine. Maybe even come up as high as here. It's like if I was taking a short with a lot of confidence, it would be in this, it would be that's a long, sorry, it would be this zone here, right? I'd go just at the start of that. That's a gain. That one's a short. You know, my stop would be just above the liquidity here, just in case it wants to wick up and grab a bit more liquidity, and then I'd be driving it down, right? I'd be looking for, you know, the next kind of level down. Probably whether it would be there or not. At least there. But I'd expect it to break that new low, which, you know, if price does this, just move that out of the way a second. If price goes ahead and goes back up to this supply zone and then back down, well, then what we'd have is a 15-minute continuation of that trend. So the way I draw them is I just have a line that would go across here, and then I would just, I have a 4 hour up, 4 hour down. I only trade 4 hour or 15 minute more for me execution. I would have that there, so that would be my next liquidity level, right? So I would be aiming for that would be my short. And so somewhere here for your liquidity, that would be up there. You know, you're looking at a 3 or a 4, up to 3.5 risk to reward, which would be a high probability trade in my opinion. But it's where the price comes back up to the I don't know, but this is why you've got to be patient, right? You can't just dive in because it's too easy to get shaken out. But if you look now, we've come down into this previous structure. Had a nice reaction, small little liquidity, looking very oversold right now, and so I think price is probably going to come back up again, just into that 50% range. So I'll just draw this next to it. My fib value, not that one. My apologies. It's number, so I'll just have to do it again. So I want 0.3, 0.5 and 0.7. I'll just call them all white for now. I'll leave that one orange. Get rid of that one, don't need 0. So having price come with 3, that would be 30%. So obviously that's where interest starts to gather. 50%. Okay, now things are starting to cook. 70% and above is really the value, right? That's anything above 70% once we've broken that 50. So we've broken 15-minute structure there. Just to clarify what's going on here, because it gets a little bit kind of technical, but I promise you, if you master market structure, really makes the painting really clear for you. So if you see what's happened is, so we had a 15-minute break here. This was the candle that caused that break, to show you. That candle there, when we had that move to the upside, we were bullish, right? 15-minute break to the upside, 15-minute break to the upside, 15-minute break to the upside. Then we got a 15-minute break to the downside, so now we've turned bearish, right? There's the candle here that caused that break. So then we mark that across there, and then that would have been the new range. Continued bearish, another 15-minute break there. And then we had a new structure here, which then flipped as bullish because that structure, that candle that broke that was then broken by this candle here. So we go bullish again with another 15-minute, but then we turn bearish. So it got a bit choppy here, right? So we got bearish here again. Then we made another bearish move, breakdown as a breaker structure, but then we came back up until, of course, we broke down here. So we've broken now bearish again with a nice big momentous candle. This is exactly why I say don't dive in for that move, right? Because you can see prices starting to push up a little bit. We've claimed, this is the first candle we've claimed liquidity on, which is always something to take note of, because again, this candle here, this candle did not rise above to take liquidity. This candle didn't take that liquidity. This candle didn't take that liquidity. This candle didn't take that liquidity, so on and so forth. This candle has taken that liquidity, right? And so there's liquidity all the way up here now. And so even when you get these big moves to the upside, you can still anticipate the price is going to go in that favor. And so, as I say, I'll be looking to short anything above here. By the way, feel free to drop any questions or anything you want me to go over in the comments, gents. Still half an hour yet before we see the open. By the way, if anyone is watching this, because I don't know if anyone's in the YouTube or what, but if anyone's watching this, I'm doing a 10k Blue Guardian funded challenge giveaway tonight in my server at 9 o'clock. So if you're not in my server, head over to my server. The link is in the description. All you need to do, put simply, is to just do a tweet or anything that just puts my Discord link in the server. Just anything, doesn't matter what you say. Just do a little bit of shilling, throw our Discord link in the server, and then you'll be in the pot for that giveaway. I'm currently doing a 25k funded challenge, but I only like to trade from sign of strength. It often means that I miss this move because you cannot predict this move, right? You know, we've been you can, you know, it's been choppy for a while, let's just say, but you can't really predict it. You know, for me, it's like once that move happens, I have to wait for the retracement before I get in. I'm happy to let that move go, because what I found, the way I used to trade a lot, is I'd dive in right when you start to see a lot of kind of big moves, and you get a rush of blood to the head and stuff like that, and then price just quickly moves away for you. The only thing I'm noticing here that I don't like is it's stalling. Even though it's taking the liquidity, we're not seeing a lot of reaction from the bulls at all, are we? So there's 30%. What's the smaller time frames like? So market structure, there's a break, there's another break, there's a break. So the current 5-minute market structure, right, is there. Then we get the break here, which is a 5-minute break down. The move that created that was here. So here's the current range there. If we break that, that's a positive sign that we're going to come up again. So this is the current 5-minute range, right, just here. So we need to see this line. We need to, even if it's a wick. For me, my rule is a wick. A wick is acceptable as a breaker structure. And so if we break here, then the confidence of price coming back into that discount range raises dramatically, right? normally crap Fridays, but there's a load of options expiring, which is good. Just do a quick announcement in my server. Okay, Mr. Motives, are you in my Discord server? Let's see. So like whenever we're ranging, right? Whenever we're in this range, this is like nothing, right? You don't really want to trade within the range unless you're approaching the top or the bottom. Like this middle range here, you definitely don't want to be getting into trades here. It's just not. There's no value. See, 5 minutes, we're starting to approach back to the upside. So really, I'd like to see this break. Good man. I would like to see this break here before the momentum starts to get into the top section here. And then let's go back to the 15. Yeah, 15's got plenty to go really, isn't it? How long's left? 5 minutes. We'll see this price push up a little bit. It's been really choppy, even like market structure. So, you know, we had that nice bullish move here, putting higher highs and higher lows, and then we got that first break to the downside, and then there was the market structure here. But then it breaks again, so the market structure moves down to there, but then it breaks again, so the market structure moves down to there, and that's why we put the first 15-minute break to the upside, because that's essentially, you always want to, I'm missing a dot there, look, you always want to put your thanks mate, you'd always want to make sure that, you know, market structure is always relative to the last piece of market structure, if that makes sense. So like you'd say, you might have an argument to say, well, why isn't that the high, or why isn't that your range? Well, every time you create a new range, so the range, if you'd imagine there was no candles here, go back there, like that would have been the range, right? The range that your trading range is that. Forget about all of these little dots that are all over the place here, but that would have been the trading range. And so what you kind of wanting to do whenever you're doing your market structure is you're saying, okay, well, if this is the range, let's just see what happens. So I'll just move it on a step. So the range breaks now, right? When that range breaks, it's like, what was the candle that caused that break? Would you go to the point, the kind of point that made that break, which was here? Okay, so then it's like, okay, well, now I have to move my range down there, so I've got a bigger range, and then you continue on. Okay, so that's the current range as we see it. But what we're expecting is, because we've turned bearish, because we broke here, we're expecting that this bottom range breaks and not the top, because effectively once you're in a trend, the way the trend works is that the highs, if you're bearish, the highs are strong, right? So you always expect that the highs will hold, and you should expect that the lows are going to break. And so now that we flipped bearish on this 15-minute here, because we broke the low, the range is that the high there, and then this low, and so I'll just kind of go over just a present price action, right? So then, true enough, price breaks, yeah. So then it's a case of saying, okay, well, what's the new range? Well, the candle that broke this low was this one here. But where did that initiate itself from? Well, it was this one. Okay, so then this now becomes your new traded range. This is the range where you expect to trade. And so it's like, okay, well, now that that candle's broke, I have to move my range down here. This becomes the traded range. And so it's like, now that I've got a 15-minute break, this is my new range to trade in, and I'm looking for value if we come into this 50% move, right? So this, remember what I said about the 50%. So there's your there's that. Let me go the other way. There's that 50%, right? So, sorry, my bad again. I think I've got to go from down to the bottom. Yeah. So, you know, I'm looking for at least 50% to start getting interested in a short move, right? And so what happens now is price comes up to 50%, yeah. And now you're thinking, okay, possible time for the short because you're in that range. Price comes back up, and now you're thinking, okay, above the 50%, didn't quite get to the 70%, but like I always say with BTC, my analysis and my back testing is this is that kind of the area where you want to be looking for the retracement to start thinking about your short, and right. So we know what happens. Price comes back down, breaks the low again, okay, and then when we break the low, now we have a new range, right? So it's like, what was the range? What was the candle that broke that low? Well, this was it, right? That's before the retracement up. This was the candle. So then the new range is now here and here. But obviously, we don't stay bearish forever. I'll come back to that, and I'll come back to your question, Mr. Slimfinger, in 1 second, right? I just want to kind of get this down for you. So now that we've broken down that structure, this is our small trades range. But like I say, we're not going to. The tighter the range, this is just a good rule of thumb. The tighter the range gets, the less favourable that the trend continuation is going to continue. So we're getting a little bit tighter, right? And so let's just, obviously we can play that out. You know, it doesn't hold, it doesn't break. In fact, what it does is it breaks to the upside now. And so what we do now is we have a new trend change, which is that 15-minute. 5 minutes is exactly the same, by the way. This is all completely fractal. But now after a series of 1 hit, 2 hits, 3 hits, 4 hits to the downside for that downward trend, we've now broken bullish. And of course, now we turn that the opposite way around, right? So now that we've broken bullish, this is the candle that was the high. And so the new range now is here. And then what was the candle that created that high? Well, it was this low here, so that doesn't change, right? That's still the same. So this is our new trading range, and now we're looking for the opposite, right? So now it's like that 70% to the downside for that retracement. So now you're looking for longs now that we've broken bullish when we come down into this zone here. So now, like, if I just play that forward a little bit, so we made a new little high there, so we just have to extend that range slightly. Now obviously because that was the low that created that new high, our range goes really tight, and so we're now in that tight phase where it becomes a bit, it's difficult to trade when the ranges are tight, in my opinion, because if you're relying on that 30% or 40, 50% or 70% or whatever else, you know, like, look at the range, you know, you're looking for a pullback of a continuation to come back into this zone. Can't remember what happens, but let's see. Didn't even come into that. Well, that would be 30%, but it didn't even come into there. But you know, true as it were, now that we've gone bullish, first hit to the upside, second hit to the upside, and now here's the third hit to the upside, right? So we come back down again. This was the candle that created that, so this range now goes here, and then we can do the same again, top to bottom. Where do we hope it comes back to? Well, ideally we want it to come back to that 70% range. Where does it come back into? Just beyond 70%. And so obviously, like I say to you, you're thinking about getting into your positions here is you know, trading from a sign of strength is basically that discounted range, right? So I can change that to what would it be? Fair value. This is the discount range. Yeah, this is that. You don't want to start longing in this range, basically, because you are going against all of the benefits of getting you maximum utility on your trade, right? And then obviously that's when we come back in. Really, what you're always going to target is that we break that high, because when we're in a range, the highs are weak and the lows are strong. When we're going bullish and when we're going the opposite way, it's the inverse of that, right? The lows are weak and the highs are strong. So we should always be confident in the strength in this. I don't know what's going on with current price action, by the way, so if things are going mental, just let me know. But that's in essence, that's all I do. It's pure market structure. It's understanding exactly what's going on with where we're at, right? Just at any one time, because once it's not difficult. It takes time to master, because you've got to just get up wherever we are. But my big as a trader, as I've developed my trading style, right, I've done everything from, I don't know, just anything. I've done all different trading styles, in different indicators, everything. The one that resonated with me so much, because it gave me so much clarity, is just being able to read charts and not having to worry about patterns, not having to worry about pennants and bull flags and all that kind of nonsense, because it's irrelevant. It's all irrelevant. The only thing that matters is that you understand market structure. And I have a few basic rules. So my market structure rules, if I can find it, let's go to the 4 hour. They're pretty clear, right? Wicks count for market structure. My thesis is that if wicks, if it wicks, so if it wicks a high or a low, the strong reaction did not hold. So if you're counting on a certain high or a low to hold, and it doesn't hold because it just wicks through, many people will say, oh, it's just a liquidity grab. You got to remember, if it's such a strong area, and you should have a lot of absorption from big limit orders that are sitting on the book, why did it break? It's usually the first sign that, okay, maybe it didn't break on the first time, but it'll eventually punch a hole through. And so I will always count wicks. I've flip-flopped on this a few times, but I've come to the agreement, actually, wicks will change the direction over time. Even if the first wick doesn't and it comes back in, it's like it's gearing up for another shot, okay? So I will always class wicks in terms of my market structure. A trend change signifies the reversal, and that's where we get that. Like I said, yes, so, 4 hour breakdown, they were on the 4 hour candle now, 4 hour breakdown, 4 hour breakdown. The moment we come up here, that's a trend change, even though it didn't last that long. We're going back down again, but still, that was still a small trend change. And then my final rule is we should trade with the expectancy of the strength in the trend to hold, and then only change our bias once it breaks, right, whether it's a wick or whatever else. And so when you have that kind of really mechanical plan, everything becomes simple to trade, because you're not second guessing yourself. It's like, I've got rules, and it takes away a lot of the discretion. I have in my head, I kind of think the more discretion you have, the more emotional you get. And so the more mechanical you can apply yourself to be on the charts, I just think it kind of removes a lot of the focus and the edge bit, right? But what's the edge? The edge is that you're kind of expecting that prices, when you are in a trend, that you're expecting absolutely that a pullback is going to come into that kind of 30 to 70% range. And I won't trade on the 30%. I at least have to see over 50% me. And more importantly, into some sort of a supply zone or a demand zone. Now listen, Mr. Slimfinger, you asked me a question. If I'm scalping on the 5-minute time frame, how should I approach or think about ranges? It's the exact same, right? So let's go to the 5-minute. So where's in fact, let me just do the 15-minute first, right? Where are we? So get rid of these, because we were just messing around before, weren't we, with different things. So the way I approach any time frame, because it's all fractal at the end of the day, it's all the same. I'm just going to get rid of all of this and that and that. Right, so right now my last structure break was a 15-minute break to the downside, right? So that's just a 15-minute. And the way I do it is, like, if I go to the 5-minute, like I've got to think to myself, where am I relative to where the trend is? So the trend is currently bearish, it pulled back, and now it's bearish again, so I'm expecting another pullback, but I'm going to expect that it's going to keep doing this, right? down, up, down, back into that 30, 40, 50% or 70% range and continue down, right? That's my rules. I expect that price is going to continue to do that, and I expect each time that the high is going to hold, because that's where the strength is, right? You can clearly tell there's a lot of big money that's came into the market here. And so on the 15-minute right now, where's the last break? So that was the last break, right, where price came down and broke from a bullish move up from that pullback. This was that. You can call it a change of character, you can call it a trend change, you can call it whatever you want, right? But how would that look on the 15-minute? And so it's like we have that break, so price pulls back. Where's the next break? Next break is here. So that would be a 5-minute break. Price pulls back, right? But clearly the move that made that 5-minute is here. Did not come into the discount range, so I would not trade that. I just wouldn't trade because it didn't come into the 15-minute range. Sorry, into the discounted range. So then you would say, okay, well, price comes down, then it makes a high, takes the liquidity from this candle here, which is what you want to see at least for a pullback. If it doesn't take the liquidity, you expect the move to continue down, right? So there's that move down. Then we come down to here from that one move. That's the candle that broke it. So the range on the 5-minute is there, right? That's your range high. And then obviously you don't know we know what candles will come out, but we wouldn't have known what candles prior to. And that would have been, here would have been your range low. So that would have been your range low there, right? Because that was the candle that broke it. So now you're saying, well, where am I anticipating price to come on that 5-minute chart? So in this range, it's that same deal, right? You only want to trade where discount favors. Now, obviously, that candle there came into that range, right? Sorry, just extend that out. That candle came more than 50% in, so that would have been a nice scalp. And then where you're going to absolutely expect it to break? Well, you're going to expect it to break the low because we've obviously gone bearish. We can continue that down. So then it's like, okay, if this was the candle that started that move, the next range down is here, right? So that's there. And so we bring the high down to there. And then obviously the low that broke that was there, right? So now we've got a much more extended range because that candle broke down. So it's that 50% rule again, right? So if I just take my discount, well, again, do we come up at least 50% of that range? Will we probably come into the 70% range actually? Yeah, I'd say that was the 70% range. So that's that kind of golden area I love to get into for that short. So that would have absolutely been a really nice scalp, right? And then it's a case of saying, okay, well, that's the candle that made the low. This is the candle that made the high. And then it was this candle that propagated the move down to there. And so the range the range just keeps on playing out, right? So then you've got, until it doesn't, yeah, that's the high. That was the low that got created. Where do we go? Does it go 50%? Absolutely. You can do this even by eye. You don't even need to see the move. And so, you know, even if you're arbitrarily saying, well, I don't really know where the 50% range is, but, you know, you do know where the high is, right? And so on a short position, if that's your 70% range, well, as long as you go above your high, that's the high point that we created. That's what you're open for, right? And then there's your scalp. What are you expecting? You're expecting the low to break. Now, I don't know if this low is going to break, but that's how I trade, right? That's my trading psychology, because it's just basic market structure and it's price action. And so if that breaks to the upside, well, I'm going to get that's going to be a trend change, and then I'm going to be looking for longs. Yeah. So once that would be, let's assume that says 5 minutes. I only trade on the 4 hour and 15, but that would be a break to the upside. Each one of these would be a break to the downside, and all these do is just give you confidence in the trend. Yeah. So that would be a 5 minute break to the downside. Is our current range between here. We anticipate a move to the downside when we get into the discount range, which is here, anywhere in here. As long as it's above 50%, you know, you're going to be good, aren't you, for that potential move? Did that answer your question, Mr. Slimfinger? Good question, though. The other thing you kind of put into play with these as well is, like, you know, I use these just to kind of get a guide on where we are with things momentum wise. So we're starting to come into that kind of overbought state from this move to the upside. So we've generated a little fair move up, but because I'm trading the funded challenge right now, and the spreads are really quite wide, which is shit really, I can't just dive in and scalp on the 5 minute, because I just get fucked by the spreads. Do you know what I mean? It's not. I have to look for bigger moves, which is why I'm on the 15 minute. But just by order of play here, you can. Yeah, no problem. You can clearly tell, you know, once you are in a nice range and you can see that range forming, you can just keep on doing these and, you know, making sure your risk parameters are well set. That's the key thing, really. By the way, if you're not in my server, mate, you come and join. I'm doing a 10k funded challenge giveaway tonight at 9 p.m. All you need to do is to just do a tweet, copy my Discord server in a tweet, some sort of shilling, whatever you want, and there's a channel in my server where I put the where everyone's putting the link. I'm just going to do a random number generator. Whoever it picks out will get a 10k funded challenge from Blue Guardian. So feel free. But back to the 15 minute. I'm going to delete these because I'm not trading on. These are not. You can see how everything gets fractal, though, can't you? You can see, like for me, I'll show you what I'll do in a sec. Just delete them. So, like, I trade the 4 hour mainly and the 15 minute. This is my key here. Just to kind of, if anyone's interested. So I have my market structure on the 4 hour is the solid white line, and it's either a down move or it's an up move, and me swing structure is kind of the darker red and the darker green, and my lighter internal, or the 15 minute, is like a lighter green and a lighter red. It just when you zoomed out, that just looks like a kid's throwing a load of paint on the page. But, like, you know, at a 4 hour level, like, it's always about the range, right? So how can I do that? So that was the break there. The move that created that was there. So you can see here, like, that move there down to there. I mean, look at that for a move. That is just, it's like a really nice move. I mean, that's the supply zone there, by the way, into here, right into that zone, you know, and what a nice move that would have been. We come out of that discounted range, sorry, out of the premium, because we've gone bearish, you know, we're anticipating that the lower is going to break and the high will hold. Look how much that retraced into that zone before slamming back down. And even on its second attempt, you know, if you got into a trade somewhere around here, eventually it does smash through, right? And that's you know, on a 4 hour, you're going from like 30 OK down to 28k. So try to master this. This is like, it's the bedrock of any kind of trading discipline or any kind of strategy, whether it's smart money concepts, whether it's this. I think the problem with a lot of smart money concept guys, by the way, is they don't understand market structure well enough to be able to trade the system, because they change the rules too often in their own heads, and they don't quite map out what it should be. And I think smart money concepts is a great framework. It doesn't tell you how to trade, it just tries to tell you about how the market works. And so you've got to figure out market structure. So, like, where are we now? We made this break, right? And then we've claimed liquidity, and this for me now is a new low, right? So I would, I can delete that. So I would naturally now have a new line here, right? And if we break down, the reason I wouldn't classify this is because, again, we only qualify liquidity when we take liquidity from the candle above. This was the first candle that took liquidity. So now we can know. Now if price comes back down there, we'll get a new breaker structure, and our range will then move down there, right? That would be our new range here. If price breaks down here now, this is our new high range, and wherever that falls will be where we trade range. And again, that same concept that I showed you on the 5 minute, I would apply to the 15 minute. And so I would not anticipate that this should break if we break down this low here. And the only reason I've defined that is because this candle specifically took the liquidity from this candle. I hope that makes sense. If this continues to go up higher though, of course I'm gonna take that range higher as well. But markets have just opened, right? So let's just see what they've got to say. Does anyone in the chat by any chance know what time today the options expire? I think it's 4 p.m. UK time, where if the values aren't what they anticipate, a shitload of selling will happen before they get to basically before they get to zero on their options. So they'll sell at whatever they can get for. So I don't know if anyone knows what time they expire. If anyone can do a quick Google search or something. I don't know about you, but I always think as soon as the markets kick in, with 4 minutes into the market, if price immediately starts to shoot one way, I'm not convinced by that initial move. I never am. I always think there's going to be another move to the upside, because it's all about liquidity, right? It's always about trying to get the liquidity. Now you can see here, we've got a lot of nice liquidity being built here. 3 times it's been rejected. So every time that gets rejected, it takes a lot of capital to push that price back down. So you can clearly tell this is now a zone to be mindful of, yeah, because there's a lot of liquidity there. There you go. Well, let's take liquidity. Yep, took the first liquidity. We'll take this one. Someone protecting the shorts. There you go. Second liquidity point taken. So that move that you saw, the big shoot down, has just been wiped out. Probably bot. This is why I was speaking to Styler Motors, who's I think maybe still on. We were chatting before just about being patient, and I come on live when price was probably down here, and it was like it's very, very easy, really easy to jump. And it's exactly what happened to a lot of kind of retail traders, and me included, by the way. You easily jump into these shorts, and it's like it's just not the way. It's not the way to trade. Always anticipate that you might miss the main move, but you'll always get an opportunity, because price will always, not always, that's not the right word, but will oftentimes come back into that kind of supply or demand zone, or at least that kind of 50 to 70% range which you want to see, and that is currently. I need to save this as a template because I keep on having to change this, but get rid of the 0, 0.3, 0.5, and do 0.7. I'll just have them white. I'll have that as gold and that's white. And then I'll take off the background, and that'll be it, right? So we're approaching that 50%, but for me, I want to see above 70, and then I'll definitely look to get short. But for me, like I was saying before, this is the optimal trading range. If we come into that 26.2 to 26.4, I think that's where I'd be wanting to get into a nice trade. I might be patient, I'll see. Because what you want to see, actually, when the market kicks off, you want it to go the opposite way to where the narrative goes, because it's always going to come in to start with first half an hour, the brink session, chop up a load of liquidity, stop people out, do a bit of a clear out, and then the main direction comes in. So let's just say I'm hoping we come into that zone. But we've got no further market structure yet. It's just the range between here and here. Take the magnitude off. So price can do whatever it wants in this range, and we don't need to worry about market structure just yet. What we're looking for is that optimal zone to show from, because we think the market is bearish, right? It's created the first bearish move here. It's confirmed on a 15-minute. It's created multiple 5-minute moves to the downside. Just waiting for it to come back up again. Back up for that a bite. Guys, can I just check in the live if this is still live and you've still been able to see it and it's not stopped, please? If anyone's here. I'm probably going to go to about 3 o'clock, I think. Any questions from anyone, by the way? Good man. Is there any other chart you'd like me to have a quick check out while I'm waiting for price to move up? Don't forget, fellas, 9 o'clock tonight UK time, I'm going to be doing a 10k funded challenge giveaway. All you've got to do, enter my server, do a little bit of shilling on Twitter, and then you entered into the draw. It looks like it wants to push up, doesn't it? It's got plenty of momentum on its side, that's for sure. It's took the liquidity from all of these candles here, which is nice. I'd like it to take the liquidity here. That's exactly right. Yeah, every time a new formations happen. So the last range, so you can see here, you know, 15-minute break, 15-minute break, 15-minute break. Each time we break, it's a new range, right? So this range would have been, I always look for the high that breaks the low, right? So not the high, but the move that breaks the low. So this, when this price comes back up to here, the break was this candle was the one that done the break, right? And this is where it broke. And so the range would have been here. Your traded range would have been, that would have been the high, and this would have been the low, and then it retraced back 50% and then moved down. So then this would have been the range. The new range would have been there and there, and there's your traded range. But then we flip bullish, so then your range chops again. We get really tight with the range. The range gets very small here. I don't like to trade in the range when it's really tight, because you know you're going to get a lot of kind of whip, kind of flapping about and getting washed out. So I like the kind of bigger ranges to trade from, which that. So I'm gonna actually can remove that. But yes, so now we are over 50%, right? So I'm expecting some good bearish mentality to start kicking in. The range, so let me just delete that. It's not valid. I'm looking for at least, let me just change that the other way, at least 70%. I'm going to save this as a template actually. Let's call it 6. Reversal range. Okay. So I'm going to be looking for taking a trade somewhere in this region here. Ideally here, this is the supply zone, right? And what I'll be looking to do is target the lows. So that would be start of the supply zone, stop just above the high there, although it could be tight, maybe even go here because I expect it to hold, but you know, sometimes liquidity is required and so it goes a little bit higher, and I would target the lows. Now I always like to trade 5 to 1 risk to reward, right? And so if I do that, what I don't change my stop loss or me goal. What I do is change my entry until I get to that 5. Sometimes you can miss out on trades when you do that, but you get a better risk to reward, right? If that's where it goes. So for me to get a 5 to 1 to target the low, and I'm targeting the low specifically because this is the strong high, right? It's strong because we've now created a new bearish move. So that's it. This is the current traded range. Yeah. Did that answer your question? No troubles, man. What do you think of the background music, fellas? It's very zen-like, innit? A bit loud, like. You'll find this background tune on every one of my videos. It zens me out when I'm trading. I like the kind of vibe of it, just like a nice vibe. So here's a good argument now, right? So like we've traded over 50%. Now my rule is that on a pullback, once we get past 50%, that's all fair game for shorting, because it's done its job, right? It's retraced back 50%. That's what I personally am always looking for. That's what I'm always looking to do. I like to be even more greedy though, if I'm honest, and try to get into that, at least the 70% range. And so I've back tested BTC a lot. So when I look at the range between the kind of low and then the pullback, it ranges somewhere between 30 and 70% most of the time. Not all the time, but most of the time. So that's what I always aim for. It depends on the type of market. If it's really moving, then 30% is probably okay. You can sometimes get a 30% retracement, but when it's a little bit more choppy and a bit more flip-floppy, then you know I'm aiming for the maximum, which is at least 70%. So, but look, here's the current demand zone here, right, where I think we'll get a bounce from back to the upside. Does anyone know why that is a demand zone? Or would you like me to explain? Well, the supply and demand zones, they're quite simplistic actually. So when you see like, let me just take that off. When you see a candle like that forms, and it has, say, the wick, right? And then you have another candle that does that. Let's say like that, and then you have another candle that does that. This is what we call, what it can be called an imbalance, it can be called a fair value gap, it can be called lots of different things, but it's basically the gap between the wick of it's only ever a 3 candle move, so don't ever complicate, it's just 3 candles, right? It's that is called an imbalance, right? And what that normally means is when big orders have come into the order book, it's created an overwhelming disproportion of buyers to sellers. So in this case, it's a lot of sell orders have come in, and because if the order book's relatively thin, let's just say, what you tend to find is there's a lot of orders that didn't get filled, or just didn't get the opportunity to trade, or their orders didn't get filled, and so there's a shit ton of orders still left in this zone. So it's called a supply zone or a demand zone. It's where there's orders still on, and it's denoted by where there's a fair value gap, right? Where you see this big candle, and what you want to see is that the wick, when it closes, that is not a fair value gap, because that wick and that wick have covered the orders between this big move to the downside. But when they don't, and it's like that and like that, well, that's effectively, that gap between the two is unfilled orders, basically. And so what you do and where you target as a supply zone is not the fair value gap. Actually, it's the candle that created, or the candle that preceded the move. So that becomes the supply zone. If it's the opposite way, it's a demand zone, right? So that on this side, it's a demand zone, because it's where if price comes back, if price comes up and then back down, it's where buys are going to come in. At the top is obviously where sells are going to come in, so that becomes a supply zone. Supply is to sell, and to buy is to demand is to buy, right? So that's essentially what that is. And so whenever you see it, like you can see here, right, when this candle was created, before this candle kicked in, that was a huge move to the upside that was imbalanced, right? And you can see here, look at the imbalance between there. That's that fair value gap between that little wick there and that wick. And so I always anticipate the prices, going to come up, fill the fair value gap into the supply zone where there's a lot of orders that didn't get filled, and then price comes back down. So it's like whenever I'm talking about very high probability trade setups, it's targeting these kind of zones. And again, like I say, I think price is going to come up, but when I've seen this candle come up, I marked this as a demand zone, because I think buys are going to come in here, because again, the capital that it takes to make these kind of moves in such a fast acting move means that orders have been left behind. And look, like I said, it's come back down to fill it in, right? And so theoretically you could buy here. That wouldn't be a bad idea to buy. Where would your position be? Well, it would be there. It'd be very, very tight. You'd be just underneath there, and then you target the supply zone below. I'm not going to trade it if I'm honest, but that's how you would trade it, right? That's just supply and demand zones. And that's why for me market structure is so crucial, because it's understanding relative, it's almost like a framework, right? Understanding where you are in the market, i.e. we're moving down now, right? But I anticipate that we're going to come up into this zone first. And so this is like discount if you're buying. When we come up here, it's a discount if you're selling. Yeah, you just got to understand the two kind of ideas. But first and foremost, you got to understand market structure. So that's came and filled that gap, right? So now that fair value gap is filled. And so what will be interesting to see is, do we see this as a valid demand zone? Which I think it will be, because I'm looking at the momentum here. We're still quite low. We've still got plenty of time to move up into that zone there. So for sure, I think it could be a nice zone, but we'll see. I hope none of you guys have just gone in and put an order in. But it's just how I trade, to be fair. I used to practice market structure on the 1 minute because you can do it live and just, you know, continue to see it unfold, and you get really sharp with it. So like, you know, there's the break there, then we have another break there, there, and so on, and then we after we break, that's the low, but then when we come down, we get a change of character, or the trend change to the upside there, to that wick. Then we get another break to the upside from that wick. So you, like I say, you maintain bullish momentum until you break, right? So this comes down, so the range, what created that high, well, it's there. Okay, so that, you know, if I was putting my dots on the page, it'd be there. And we get another break here, and so on and so forth. So it's like each time we get this break, it's just continuation of market structure being bullish, right? At least on the 1 minute, but remember, everything's fractal. But now we've got that nice move there, where you're looking, that was the move that created it, pulling into that 70% range. And of course, it should come to no surprise that we're getting a lot of reaction now, right, from buys coming in. And so we should see, with that move into the, there you go, nice move to the upside. So you can probably tell each time that kind of edge, don't know if you want to call it an edge, but I think it's an edge personally, because you can predict in real time what you expect price to do with a couple of things. Number one, knowing where your range is. Number two, knowing your discount and premium. And then number three, wait until you get into that kind of 70% or higher is even better into that range, and then moving forward. So that's just how I like to trade. But we'd expect, because we are moving up, that this is the low that we shouldn't anticipate to break. So price can come down as deep and low into this demand zone as it needs to. If it breaks this, well, it is what it is, right? All you need to do then is we change direction, and then we're just going to be looking for shorts. And again, if you go on a trend of 5 breaks in a row, let's just say, and then the sixth one, you get stopped out, but each one of them is a nice little scalp. Well, you've made some good money there, haven't you, at least? And then you change and flip it the other way. Now, where that becomes difficult is if the market is really like it's flip flopping between ups and downs. So it's only a good strategy in a trending market. But there's certainly that's the edge that you need to find and look for to trade it effectively. But it'll be interesting to see what we do on this 1 minute, because there's the traded range there to there, right? This range. And there on the 1 minute, you can see the fair value gap there, right? That's the fair value gap. But there is the demand zone on that 1 minute. So theoretically, price can come into the 1 minute demand zone here, and that will be a beautiful trade to go long from if it taps this demand zone. So this is a fractal based demand, right? So you've got the 15-minute demand zone here, and then the 1 minute demand zone here. Let's see what happens. Okay, so it breaks. So now what you do is that would be the change there, and you're waiting for where the new range comes into play now, and then you're waiting for a pullback into that 50% range. So that was the previous range, right? And so you expect that price to come, just show you what I mean. We don't know where this is going to end, so we might just keep having to keep extending this. And then when it stops, anticipating that it comes into that 50% range, so it's currently here. We are coming to the bottom of that momentum, so I'm anticipating that price will start to move up. Just see where it ends up. But remember, when you're trading on this 1 minute, you've got to understand that the fractal nature of markets, like the 5 minute, the 15 minute, the 30 minute, the hour, the 2 hour, the 4 hour, they've all got their own versions of this same mentality. And so this is why I always do my market structure analysis for the 4 hour first. It's the time frame I like to use. Once I've got the 4 hour down, I understand where I am relative to that 4 hour discount range and that 70% and above. And then I'm waiting for the structure to change on the 15 minute when it's in and around that zone, and then I can start going either short or long based upon that. Like just diving into the 1 minute chart here and expecting something to happen. You've got to know you've got to know where you are relative to the other time frames. That's the key point. But now that we flip bearish relative to that 15 minute, right? So again, we've already came into that 50% range. Remember, from this move to the downside, come into that 15% range. If we break here, that is now technically our first, our new 15 minute break that would occur here. And then again, my range moves down to here, and then I'm waiting for that. I'm waiting to get into a trade when it comes into this zone here. That's just it. It's as simple as that. It doesn't have to be complex. I'm just waiting to see what happens here now. So let's just get rid of that a second. Get rid of that. Get rid of that. I would like this to break, because if it breaks here, I've then got a new traded range, which is a little bit shorter. So that's now mitigated this supply zone, right? It got broken through. Supply and demand zones are only relative if you're in the same direction, right? So, like right now we're bearish. That would be a great supply zone there. That would be the perfect supply zone. Whether it comes up to there or not, I don't know. But if this breaks, then I'm going to be looking for some sort of supply zone here to get in. Difficult to see on the 15 minute. Maybe it offers us something on the 5. Yeah, well you've got a fair value gap here on the 5 minute, but the supply zone's quite large, so it's that. But if this breaks, so this would be the new range, then you'd have let's see, yeah, you'd have your 70% in that kind of supply zone still, so that would still be a valid, nice supply zone to go and target. Like, see, if you remember, we were waiting on the 15 minute actually. Don't know. It's difficult because momentum's still got plenty to go on the upside, but I tend to not follow momentum too much once we're in a trend, because it doesn't really mean too much when we're trending, if I'm honest. So I missed a good trade there. I should have. What I should have done is said, okay, and stuck to my guns. My version of a good trade is above 50%, and that definitely, between the swing range on the 15 minute, definitely came into that 50% range. And so that probably would have been a nice trade, because I'd anticipate this should probably break now, to be fair. But what I will do on the new range, so whatever we determine the low is before we start moving up, is I will probably look to take that trade. This is why you've got to be patient, by the way, as well. It's not like it's easy to get into silly moves that there's no value in. So you always want to try to have a plan. And now, of course, price is starting to move back up a little bit. Now let's just dive back into that 1 minute again to see if we can see what happened there. So the range broke. So where are we expecting price to come into? Hit the 30%, didn't it? So into that 50% possibly. This is a zone we'd be interested in. And I'll keep banging on about this, guys, but if anyone, I'm doing a 10k funded challenge giveaway today. Well, actually it's at the New York close at 9 o'clock tonight, so feel free to dive in to the Discord server and get involved. Probably going to close this quite soon. Hopefully I've shared enough kind of insight into kind of at least how I trade and what I'm looking for. But as I say, I share all of this stuff anyway in my server. If anyone wants to dive in, always nice to see new people, new faces. Appreciate you listening along. Actually, it's always nice to have a few people watching. It's good. If you actually look, this is where it actually came into that demand zone there. So look, that's so before I was explaining about the fair value gaps, and if you look, that's that demand zone there, right? Where did price come right into before it started moving back up again? Right into that demand zone there on that 1 minute. And obviously we're quite low on the momentum indicator, so theoretically we should start to move up a little bit. But where we're anticipating it to move up to, again on a 15 minute, well, I can't, that's still not the range, by the way, if anyone's wondering. The range is still here because we haven't broke the low, and that's why until we break that low, we can't put the range high here until that low breaks. So this is technically still the range. Theoretically, by the way, price can still come into this nice supply zone here. I would love price to come up to here, because then you're in for a much better risk to reward ratio for your trade there. But I'm just obviously you can only trade what's in front of you at the minute, and so that's why I'm just sitting on the sidelines until something really comes and sticks out to me. So, but if this breaks, then that becomes the new range, and then what we're looking for is for price to come into this area here. Okay. But for now, chaps, I think I'm going to leave this one there. Thanks very much for tuning in and watching in. If this is something you like, I sometimes do this just when I've got a chance. But if there's enough, if you guys like it enough, then obviously I'll do it more. I think it's always good to do these live sessions, because at least, I don't know what stage different people are at with the trading games and stuff like that, but I always think it's good to hear someone else talking these things through, what they're thinking at the time and what they're waiting for and what zones they're kind of anticipating price to come into and stuff like that. It's, I'm not saying that I'm the best trader in the world, or you should listen to me, by the way, but obviously I always think take as much knowledge from as many different people as you can to formulate your own opinion. But from my perspective, I always like to kind of see people and get into that kind of mindset of what they're thinking when they're trading. So if that's something you like, just let me know. I'll continue to do it. Like, sometimes it can be boring as well, though, when there's no movement on price and it's just doing its kind of flip-flop stuff. So that's equally I could understand as well if people don't really want to tune in for that, because sometimes it can be boring. But now it's like, is price going to break and then we get a new range, or is price going to continue up? But as it stands, this is just that traded range. That's all it's doing. It's just in that kind of flip-floppy mood, right? It's been rejected big time there though, so I think price should break down and create a new price leg now. And basically I'd probably discard that demand zone, at least for the end, for this time. Let's just see what happens. I'll wait for this 15-minute candle to finish. It's just for me on the New York Open, right? All it's done is come up and give us a little move. Normally what happens on every open is it takes the liquidity at either, if the move is to the downside, it will come up to the upside, take the liquidity first and then move down. It's just not done that, which is like normally weird, because there's not enough liquidity, I don't think, for that move down, unless, you know, bigger players who have been patient are using all of this as the liquidity, because this is huge. I mean, there's a lot of liquidity built all up this leg here. So theoretically, these moves that have come down here can be that driver for the move back down. So it doesn't necessarily need to break that to be completely fair. It just would have been nice to get a trade up into that zone, really. So the TPO is currently 26,565. We're way below the value area low on the TPO as well. So where's that? That's 26,565. Let me just see. It's roughly somewhere around here. See, it may have came into the TPO POC, and now it's starting to move down. So it might have already tagged that. It wouldn't surprise me. That would have probably been a nice move. I didn't think about looking at the TPO, to be fair. We don't have any single prints at all here. We just have a bit of excess at the bottom and a bit of excess at the top. But the TPO from 2 days ago was down at that 26,184, so that could be a low target. We have a shit ton of liquidity sitting on the order book at 26k as well. Over 902 Bitcoin ready to be exchanged. That's just on Binance, by the way, so there's probably a lot more there as well. We've got an awful lot of single prints that have not been filled from this huge move to the upside back on the 12th of September. Again, single prints oftentimes get filled eventually. So these blue areas here on the TPO chart oftentimes get filled. So, you know, if a move is going to occur, and it's a quite big one, I'd probably hypothetically think this would be a big move target where it'd be aiming for, which is that kind of area between 25,600 and 25,230. Doesn't look like it's going to do anything now anyway, just for the meantime. Anyway, my eyes are peeled on the charts. I'm going to shoot, guys. Thanks so much for tuning in and watching. I'll speak to you guys soon.